Hello traders, Gary Wagner here just after 11:30 in Honolulu, 5:30 in New York. It is Friday. Happy Aloha Friday as we say on the islands. It is the 5th day of July, 2019, and this is the Daily Report for Gold and Silver, our weekend review. And once again, what a week we have seen, really what a day we have seen. And we have seen some extreme volatility in gold pricing recently, and today was no exception. The U.S. Labor Department did come out with their jobs report from last month. The anticipated number came in at 166,000 new jobs being added. The actual number came in with an addition of 224,000 new jobs being added last month, and that put pressure on both the equities markets as well as the precious metals, really specifically gold. However, it had a much more dramatic effect on gold than on equities. But at the same time, we saw gold really come off of those lows. It was down to approximately $13.88 before moving back up. That did two things for us. The first thing is it did stop us out at a loss on our current long position that we had. However, when New York opened in the morning here, we went ahead and added another position from the long side, this time getting in at around $13.91 with the market closing at $14.01 to take away some of the sting that occurred from the loss earlier that day. Speaking about that, let's take a look at our current pricing. Traders, we are looking at current pricing, this of gold, which did close back above 1400 at 1401.20, but it still sustained a $20 drawdown, $19.70 to be exact, and it gave us the opportunity, after being stopped out, to re-enter the market and recapture some of that money that eroded. Now, in terms of the other precious metals, we did have platinum selling off by about $30, $813.70. We also had silver closing lower on the day, and it is at 15.01 cents. And then palladium was in essence unchanged, up 20 cents on the day at $1,566. Now, there was some significant headwind with a strong U.S. dollar coming in, up about 0.5% at 96.84. With that in mind, let's talk about the trades we went through this week, as well as look at some technical charts. Traders, after having an exceptional month in June, in which we took well over 100% in terms of profits on two trades, July started on a very, very rocky note when we had a tremendous move to the upside right at the beginning of the month, and that would be this green candle here. As it traded on the following day, we did enter a long trade, getting in anywhere between 1430 on the high side and about 1427 on the low side. As you can see, obviously under pressure, this is a daily chart, and then that was followed by this tremendous fall from grace today that took the market from roughly the mid-14s, 1421, down to a low of approximately 1288. That did stop us out, and the differential being between 0813, which is where our stop was, and our entry price, which is between 1427 and 1431. However, we did take an aggressive stance as this market sold off, and as it hit a key price point, which was 1288 in the market, my sense was that we were looking at something fairly overdone, and based upon that, what we did is we issued a buy recommendation as the market opened in New York last night. Here, of course, morning in New York. Traders, of course, who took that call, we got in at approximately $13.91. The market closed at approximately $14.01. So we've got about $10 back of the $20 loss that we sustained throughout the week. That being said, what can we expect from next week's trading action? So traders, based upon recent action, I can tell you that although we saw the market fall dramatically today, the low of the day itself is an indication of potential support and falls in line with a very acceptable Fibonacci retracement after seeing such a dynamic move. Now, when we look at this chart, it is a daily chart with a fib retracement. In essence, we are starting that retracement down from these lows here at about 1269. We take that up to the top at 1442, which, by the way, is also a key level in terms of our Elliott wave count, which comes in at the conclusion of a major third. 5 out of 5, and then 5 out of 5 when we look at intermediate and the minor count. Then, when we calculate the move from these highs down to the lows that were achieved over this trading day, it really amounts to about a 0.618% retracement, just shy of that. In other words, the 0.618% retracement is at 1387.80. The low in the market was 1388.60, so within about $1 of that projection. And what's more important is, although we did get stopped out on the trade we put on earlier this week, we got a little aggressive and tried to actually buy the dip. We got in, as I said, at around 91, low being 88, and the market's at 1401.20. So I believe we've got a very, very strong possibility that this will turn out to be a brilliant trade. It will make money for us. Of course, we'll have to see what happens next week, but in terms of my projections itself, and that's what's of key importance here, my sense is, if the market is able to find support, and of course the support that we're looking in comes in at 1388, 1387, then this basic scenario we have is this is our third wave up. We then have our fourth wave down. That is now been completed. And interestingly enough, I believe that we will take a move and challenge these highs that are sitting up at 1442.40. One quick correction as I look at this chart. The beginning point is actually 1281. That's this line here. The other one is being used for a Fibonacci extension. So, based on the parameters that we're looking at currently, and the fact that although the jobs report came out well above expectations, the differential in terms of how market sentiment change is simply the amount of the rate cut rather than whether or not there will be a rate cut. The CME's FedWatch tool is still predicting a roughly 100% probability of a rate cut on July 31st when the FOMC meeting concludes. Therefore, traders, my recommendation is to maintain your current long position, maintain your current stop. This has been Gary Wagner wishing you, as always, good trading. I trust that all on the mainland and Canada had a good holiday yesterday. We will talk to you on Monday for the next daily update and review. Bye-bye.